Ledger has been compromised once again. FTX is trying to save themselves from bankruptcy. Cardano ADA could moon any minute now, and much more crypto news has been happening over the last week. You do not want to miss this. So, welcome back again. I'm Theo, a content creator for the Alt Crypto Talk team. And remember, nothing in this video is financial advice, purely my own opinion and based on my own research. Do not invest in anything you can't afford to lose. And be sure to smash that like and subscribe button. Leave a comment if you have any questions whatsoever. And be sure to follow us on Twitter at AltCryptoChens for daily crypto content. And check out our website for frequent guides, project reviews, articles, and everything crypto related. Okay, let's jump straight into the video. Now, my friends, let's start off with the first article, which is going to be about the Ledger breach. And this is not so good for the company. This could be the last straw. Now, crypto community members have posted their responses to the Ledger Connect Kit exploit that affected multiple dApps across the Web3 space. This actually did cause one of the biggest problems in crypto. On December 14th, a hacker attacked the front end of multiple dApps using Ledger's connector. The exploiter breached major apps such as SushiSwap, Phantom, and Revoke.cash and stole at least $484,000 in digital assets. Ledger announced that it had fixed the problems 3 hours after the initial reports about the attack. The firm's CEO, Pascal Garcia, said it was an isolated incident and noted that they were working with the relevant law enforcement agencies to find the hacker and bring them to justice. While Ledger claims it was an isolated event, Linear, a zero-knowledge rollup by consensus, warned Web3 users that the vulnerability could affect the entire Ethereum virtual machine ecosystem. Wow. A day after the incident, community members went on Twitter to express their sentiments about the Ledger incident. Some advised followers to use other wallet platforms, while others called on Ledger to open source everything. Ledger's security explained a piece of paper over a door. That is absolutely quality. I love that. On December 15th, Bitcoin supporter Brad Mills told his ex-followers to use Bitcoin-only hardware built by Bitcoin engineers, focus on securing Bitcoin. Mills urged community members never to onboard their friends to Bitcoin with hardware wallets Ledger or Trezor. Surprising because I love Trezor myself. However, in 2020, another Ledger incident led to the leaking of user information like mailing addresses, phone numbers, and email addresses. Referring to previous Ledger breaches, Ethereum name service developer Nick Johnson said in a post that no one should recommend their hardware or use their libraries. Okay, so it's clear Ledger has learned nothing about OpSpec from multiple breaches. At this point, I don't think anyone should in good conscience recommend their hardware or use their libraries. That is from Nick SD Johnson on Twitter. According to Johnson, Ledger showed a consistent disregard for operational security and no longer deserves the benefit of the doubt that they'll improve. I personally agree. Meanwhile, crypto trader and analyst Krillin criticized Ledger and called them out for spending a day removing negative comments under their posts on X. During the hack on December 14th, the attacker utilized a phishing exploit to gain access to the computer of a former Ledger employee. The employee's Node Package Manager JavaScript account was accessed, leading to the breach. Following the hack, a community member advised Ledger to open source everything and let the community be their surgeon to stitch them back together. The company announced on May 24th that it had open sourced many of its applications and is committed to open sourcing more of its code. According to community members, transparency is not a luxury but a lifeline. Trust once lost demands open veins, not veiled promises. So I personally agree. Last time Ledger had all this bad news surrounding them, I was very skeptical on whether to use them again. However, this time it is sealed the deal. I am never using Ledger ever again. I'm not going to buy any of their products, and I'll now be moving all of my assets outside of the Ledger hardware wallet and onto my Trezor hardware wallet. If you haven't got a Trezor hardware wallet, that's what I personally use, and I will leave it linked in the description below if you want to get one. However, let's move on to the next article and leave Ledger behind forever. Now, I thought this would be a fun article for you to go through. This is Forbes price predictions for the crypto market in 2024. So, in 2024, a spot ETF will be approved according to Forbes. Perhaps the least risky prediction for 2024 is that a spot Bitcoin ETF will be approved, with multiple submissions currently under review at the SEC, with firms such as WisdomTree, Invesco, Franklin Templeton, and BlackRock having submitted proposals. The odds of approval continue to tick upward. In addition to the legitimacy that such a product would add to Bitcoin, in the eyes of the non-expert community, there are several other benefits that such a launch would create. These benefits include greater pressure for more transparency and disclosures, a more mature conversation on the role of crypto assets more generally in the payment space, and the general toning down of inflammatory rhetoric that is neither productive nor accurate. Regardless of which institution receives approval first, this will be a positive development for the sector, because in my opinion, I believe all the others will follow. BlackRock gets one, then all of the others such as WisdomTree and so on will get a spot ETF approved. Now, this is a big one. Tether will be either audited or deplatformed. Tether continues to find itself under increasing regulatory scrutiny, with a recent S&P report ranking both the issuing entity and the USDT token itself as a high risk. Reasons include factors that veteran crypto investors will be familiar with, lack of transparency around issuance policies, questions around the composition of reserves, doubts about the veracity of attestation and other financial reports, and the reluctance of Tether leadership to come to the United States. Despite all of this, however, USDT remains the largest and most liquid stablecoin in the market, playing a key role in the DeFi sector as well as trading on decentralized exchanges. With more exchanges delisting USDT, however, and the US regulatory bodies continuing to regulate via enforcement, 2024 is shaping up to be a pivotal year for USDT, address the long-running issues or face increased delisting. That could be catastrophic for USDT and the entire crypto market, ladies and gentlemen. Another big one, US banks will embrace tokenized payments, and this is another relatively easy prediction to make for 2024, and many of the largest financial institutions in the world have already rolled out tokenized payments running on enterprise blockchains. Such institutions include JP Morgan, even as the CEO Jamie Dimon states that he would personally outlaw crypto in the US if he possessed the authority to do so. Alongside TradFi banks, there have also been several moves by payment processors to allow, accelerate, or at least enable tokenized payments. Efforts include the continued expansion of crypto products and services at PayPal, which is not only a household name in the US, but also has a long track record dating back to 2014 in the crypto sector. The business case for tokenized payments has long been understood by crypto advocates, and as major financial institutions catch up on these benefits, it seems reasonable to conclude that adoption and implementation will continue. Fact, the big one, Bitcoin will top $60,000 in 2024 supposedly. Price predictions are always a way to judge the current state of market sentiment. A recent interview in a Bloomberg piece has some commentators stating that this current bull run will see Bitcoin top $500,000. A more conservative estimate is that Bitcoin, due to the factors outlined above, will most likely top 60k in 2024. While still below all-time highs, this would certainly be a health recovery for the sector. One thing that overly optimistic advocates will have to watch out for is that as more institutional players come into the space, the wide swings in valuation that have occurred since 2016 will be less tolerated than they have been while Bitcoin has been the asset of choice for retail and non-traditional investors. 2023 was a busy year for crypto, and 2024 is looking to be even more action-packed. Investors of all kinds should be prepared for what is to come. I'm ready, but are you ready? Let's move on to the next article. So this one is connected as $860 million moved to exchanges, signaling a massive major sell-off of Bitcoin. Bitcoin stalled around $42,000 this week as investors moved $860 million of Bitcoin to exchanges, signaling profit taking into the block noted. Despite the short-term pullback, a perfect storm is brewing for 2024, an expert said. Meanwhile, BlackRock has engaged in discussions with the SEC on 4 separate occasions regarding its application for a spot Bitcoin ETF, highlighting the growing interest and scrutiny in the space. Amidst all of this, there are 3 network movers within the Bitcoin ecosystem that are slipping under the radar, potentially setting the stage for unexpected market dynamics. BlackRock's pursuit of a Bitcoin ETF, in-depth dialogues with the SEC. The world's largest asset manager, BlackRock, has met with the US SEC 4 times to discuss its proposal for a spot Bitcoin ETF. The primary topic of these meetings was the proposed rule changed by Nasdaq to list and trade shares of the iShares Bitcoin Trust. Recently, the SEC has also engaged in discussions with Hashdex, Fidelity, Franklin Templeton, and Grayscale Investments regarding their applications for spot Bitcoin ETFs. Notably, SEC Chairman Gary Gensler stated that the regulatory body is reassessing spot Bitcoin ETF submissions in light of recent court decisions. This has increased expectations that the SEC will approve spot Bitcoin ETFs, positively influencing Bitcoin's price. According to Bloomberg Analysts, there is a 90% chance that the proposal will be approved by January 10th. Such approval could lead to increased investor optimism and potentially boost demand for Bitcoin. 100% it would. It might take some time, it might create a few sell-offs, however it would definitely overall create a bullish momentum for Bitcoin. Under the radar, 3 overlooked Bitcoin network movers. As the main driver of the crypto market, Bitcoin continues to be the market leader, attracting considerable attention. To assess Bitcoin's performance and growth, investors closely monitor several parameters beyond standards indicators like those on CoinMarketCap. 3 important on-chain indicators demonstrate its dynamics. First, according to the distribution of addresses based on holding duration, 69.23% of all addresses are holders, meaning they have retained Bitcoin for more than a year. This group significantly outnumbers traders who hold for at least 3 months and cruisers who sell frequently. Second, the hash rate. A proxy for Bitcoin's network difficulty is crucial. On September 1st, the hash rate was 368 million and it's currently risen to 493 million. A higher hash rate not only enhances network security but also indirectly contributes to the asset scarcity. Lastly, the exchange net flow, which is currently a negative 62.5 million, indicates a net outflow from exchanges. This trend could reduce selling pressure and improve sentiment surrounding Bitcoin's price. These measurements might be viewed positively by investors, potentially boosting Bitcoin's price. So the big price prediction for Bitcoin, the forerunner of the crypto market, is trading at $42,375 $75 today, with a substantial 24 hours trading volume of $17.26 billion. Analyzing the 4-hour chart, Bitcoin's pivotal point is at $41,735, coinciding with the 38.2% Fibonacci retracement level. We observe immediate resistance at $42,885, followed by higher resistance levels at $44,738 and $46,000. So we can take a look at these charts down here. Conversely, the immediate support lies at $40,700. So the RSI is currently at 43, indicating a neutral market sentiment. This figure suggests neither overbought nor oversold conditions, but a potential leaning towards bearish sentiment. I have been saying that for a while, guys. I do think we're going to have a little bit of a dip, but that is good to me because I want to buy back in. The 50-day exponential moving average EMA is at 42,300, closely aligned with Bitcoin's current price, indicating a potential short-term bullish trend. Chart analysis reveals an upward trend supporting Bitcoin around the $41,735 mark. A closure of candlesticks below this trend line or the pivotal point area could trigger a bearish momentum, driving prices towards the 50% or 61.8% Fibonacci levels. In conclusion, the overall trend for Bitcoin appears bullish above the $41,735 level. The short-term forecast suggests that Bitcoin may test the resistance levels in the coming days, particularly if it sustains above the pivot point and the 50 EMA. However, investors should remain vigilant for any shifts below these critical levels, which could indicate a change in market sentiment. So be careful, keep your eyes open, and be ready for any dips or pumps. Moving on. Rumor has it XRP will hit $22 in the next bull run, crypto startup founder predicts. So, Reaper Financial founder Patrick Riley is optimistic about Ripple's XRP potential for reaching a new all-time high. In an interview with market analyst Zach Rector, the coin could surpass $22 in the next bull market. Riley broadly discussed some of the projects his team at Reaper has built leveraging the XRP ledger, which will only propel the bullish potential. Furthermore, the crypto startup founder told Rector that the introduction of EVM sidechains to Ripple will boost the network's growth. Wow, I had no idea, and that will definitely increase the price of XRP and definitely Ethereum. From Ethereum to XRP, Riley deemed Ethereum a slow and expensive network. That's been a dying horse that's been limping along for a long time. I kind of disagree with that. Projects will look towards XRP with EVM as a faster and cheaper option. Several tokens will move from Ethereum to the XRP ledger, he predicts. The Reaper Financial boss made a bold prediction in an interview, saying one of the things he expects very realistically is that the native crypto token of the Ripple network will surpass Bitcoin as the #1 cryptocurrency. That is a big prediction, ladies and gentlemen. In addition to the integration of EVM sidechains, the CEO discussed the XLS30 amendment set to introduce an AMM to XRP, saying it may increase listings of XRPL tokens that were left out of exchanges due to their volumes, which could subsequently add to the token's price upturn. Per CoinGecko data, XRP's price is 61.5 cents at the time of writing, a 0.5% drop from its value 24 hours ago. The coin's established support levels are between 55 cents and 51 cents, while it faces rejection at the 60 cents mark. The currency hasn't surpassed its all-time high value of $3.84 in the last 6 years, but analysts expect it will go beyond $10 in the highly expected next crypto market bull run. Are you ready for that pump, guys? I know I am. I've been holding XRP for a while, and I do need to dollar cost average back in. That is just me. Now, that is it for the price prediction. They are saying $22 will be the next target for the bull run, or even $10. Personally, I think $22 is a bit steep. However, $10 is something that's very realistic. Not that conservative, but very realistic still. Now let's move on to the next article, which is written by The Block, and this is FTX trying to recover their bankruptcy. Now the FTX debtors estate led by CEO John Ray III and the lawyers of Sullivan and Cromwell has filed its amended Chapter 11 plan of reorganization today, laying out precisely how bankruptcy claims will be treated in this case. Notably, the plan contains a provision that would value claimants' digital assets in cash at the time of the date of the bankruptcy filing, November 11th, 2022. The collapse of FTX caused a notable dip in the market that has since healthily recovered, with the global crypto market cap increasing from about $856 billion to $1.6 trillion today. Even FTX's own token has nearly doubled in that time. That means creditors could stand to lose out on millions in potential gains should the plan be approved. Sunil Kavuri, an outspoken FTX creditor, says the reorganization plan goes against FTX's term of service, which stated that the titles to digital assets belong with customers and not the exchange. The reason SBF was convicted beyond reasonable doubt on all 7 counts was that he stole digital assets that were owned by FTX customers, Kavuri said. Creditors belonging to certain classes will have the opportunity to vote on the amended reorganization plan, the plan clarifies. In a statement, the debtors emphasized the pains taken to get to this point, writing, "The plan and the disclosure statement reflect many compromises to create the best, most equitable and economical outcome for all creditors and stakeholders in the Chapter 11 cases. Various thresholds of approval in both dollar amount and claimant numbers will be required for the plan to go in effect. In circumstances known as a cram down, however, classes of creditors who did not agree to the plan can still be forced to accept accept it as long as the solution is fair and equitable according to the debtor's statement. FTX did not reply immediately to a request for comment from the block. In my personal opinion, FTX, get out of this market, leave us alone, we do not want you, you are just absolute filth and we hate you. Goodbye. Move on to the next one. This is the big one that crypto analysts are predicting Cardano price to rise 6,000% to $33. Now, let's dive into this article because this is exciting. Crypto analyst Tyler Strajilovic, sorry if I pronounced that wrong, has speculated what could be another tremendous bullish run for Cardano ADA. Cardano has already done a 132% gain for its holders since the beginning of the year, but according to a discovery by this analyst, this token might just be getting started. In fact, if Strajilovic is right, ADA could skyrocket by an incredible 6,000% from today's price to $33 in the next year. That's right, one whole year. If you can wait that long, then you can become very rich. So, using his analysis of the ADA price chart he shared, Strajilovic noted how the token is now a bullish cross on moving averages on the weekly time frame. The last time this happened, ADA went on to form many consecutive bullish candles, going from 4 cents to its current all-time high of $3.09 in 66 weeks. A repeat would see Cardano reaching $33 by January 2025. A less optimistic price prediction by Chanjali puts a $1 price prediction by the end of 2025. That's a boring conservative price prediction in my opinion. ADA is about to get bullish weekly cross for the first time since June 2020. The bullish crossover is yet to happen and the token still has a few weeks to see how this would play out. Of course, in the volatile world of crypto, there's no guarantees the price will move as predicted. Nevertheless, Cardano is poised for a major rally that could extend into the coming year. Current bullish performance of ADA, network activity, increase in DeFi TVL and other factors points to Cardano continuing on its current bull run. It's important to note that the last time Cardano went on this 6,000% price gain, its blockchain network was still behind on smart contract functionality. However, the network has changed since then, with Cardano now one of the fastest growing blockchains in terms of smart contracts. Cardano is currently trading at 57 cents, up by 48.43% in a 7-day time frame, amidst a larger crypto market green week. The crypto briefly touched the 60 cent level on December 9th, reaching 63 cents for the first time this year. It has now formed a minor support at 53 cents and it's on its way to revisiting 60 cents again. On the other hand, the total crypto market cap has dropped by 5.75% in the past 24 hours as Bitcoin inflows slowed down. According to a chart shared by crypto analyst Ali Martinez, Bitcoin miners have sold around 1,000 Bitcoin worth $44 million since Friday. At the time of writing, Bitcoin is down 0.5% in the past 24 hours and 6% from its yearly high of $44,500. So, do I think this will happen for Cardano ADA? $33 is a bit of a stretch. However, anything between $15 to $30 in the next year sounds very possible. Still not very conservative, but very possible, ladies and gentlemen, and something I'll be looking out for. I hold a little bit of ADA, but if there's a price dip, I'll probably be buying my way back in. Now, ladies and gentlemen, to conclude it all up, we are currently sitting at a $1.55 trillion market cap. We've seen over $52 billion in volume in the last 24 hours. Bitcoin dominance is sitting at 51.9%, while Ethereum is at 16.8%. And we've got Ethereum gas fees sitting at 33 Gwei, which is ridiculously expensive, and I would highly recommend waiting for it to go down below 15 if you want to use Ethereum transactions. Now, that obviously depends on your budget, so by all means interact with Ethereum however you wish. Now, we've also got the Ethereum greed factor sitting at 70 out of 100, which is greedy. However, it has been higher over the last week. It shot up to around 83, but we are slightly dipping in the market, so it is expected for the greed index to drop slightly. Ladies and gentlemen, that is pretty much it for this video. If you enjoyed it, please don't forget to hit that like, subscribe button, leave a comment if you have any questions whatsoever. And we currently have a promotion running on Bybit, the best centralized exchange platform for buying, trading and earning. Bybit is home to all your favorite cryptocurrencies and you can claim up to $4,380 just by signing up using the link in the description below. It's simple. If you need help finding the right crypto gems, then follow us on Twitter at altcryptogems and head over to our website to get your hands on detailed project reviews, crypto guides and more. Thank you very much for watching and we hope you found this video helpful and informative. Until next time, DGens.